So under the budget 2022, the Malaysian government has proposed to impose income tax on incomes derived from foreign sources and received in Malaysia starting from 1st January 2022. How will that affect Malaysians like us who are investing in the US market? Coming up. Hey, what is up guys? As you may have read on the news already, I'm sure there are lots of confusion going around with regards to the removal of the foreign source income tax exemption. But fret not, because in this video I will be covering this topic from the perspective of a Malaysian retail investor investing mainly in the US market and give you a more in-depth understanding of the entire situation here, so you know what to expect for this upcoming change of regulation. So without wasting any more time, let's jump right into today's content. First and foremost, before we even jump the gun and come to any conclusion, I think it is important for us to establish the fundamental understanding of the difference between income and capital. Let's start with income. According to PwC, the scope of income to be taxed covers all classes of income, whether from business, salaries, or passive income, e.g. dividends, interest, royalties, and etc. That means whenever you remit or transfer money back into Malaysia, be it from Singapore, Australia, United States, and whatever, if that money is derived in the form of income, then that amount will be taxed according to the rates set by the Malaysian tax authorities. However, according to the Budget 2022 Finance Bill, there will be a 6-month transitional period from 1 January 2022 to 30 June 2022 where foreign source income remitted to Malaysia will be taxed at the rate of 3% on gross income, and subsequently from 1 July 2022, any foreign source income remitted to Malaysia will be subject to tax at the chargeable income level at the prevailing tax rate, i.e. 24% for resident companies, 17% on the first 600k chargeable income for SME, and 0% to 30% for resident individuals. From what I understand here, the Malaysian government seems to be encouraging us to bring back money into Malaysia during the 6-month transitional period to enjoy that 3% rate. Honestly, it looks like a very desperate attempt to solve the short-term liquidity issue. Is Malaysia running out of money? I don't know, why don't you let me know in the comment section down below. By the way, if you are investing into dividend paying US stocks like Coca-Cola or McDonald's and they pay you dividends, that dividend is usually post 30% US withholding tax withheld by your broker. So effectively, you have been taxed by the US government. But when you bring it back to Malaysia, it seems like this budget 2022 is telling us that we will be taxed again, which seems very weird to me because that is considered double taxation already. And I think that gives me the perfect segue to talk about the double tax agreement. So for your information, a double tax agreement is an agreement or a contract regarding double taxation, or more correctly, the avoidance of double taxation. Let me give you an example. Let's say I'm a Nike shoe reseller and I sell them in the United States and my profit from that business amounts to say 50,000 US dollar. Before I can bring that money back into Malaysia, I will be taxed by the US government based on the applicable tax bracket. And after that, when I bring back the remaining amount back into Malaysia, without the double tax agreement, I will be taxed again in Malaysia for deriving foreign source income. So effectively, I am paying the US tax and the Malaysian tax, and that is double tax, right? So as a businessman, I would feel that it's so stupid and expensive to have to pay both the US and the Malaysian tax. So why not I just focus in Malaysia and not do any business in the US anymore, right? And vice versa, this double tax thing will discourage people from doing business internationally. And eventually, there will be lesser international trade activities and ultimately lesser economical advancement for all countries. So to avoid this thing from happening, the double tax agreement has to be in place whereby both countries, left and right, have to agree to not tax people on both sides. And usually, it will only be taxed once on the side with the higher tax rate. Of course, I am probably oversimplifying it, but I hope you get the gist of it. Now, the reason why I explain this to you is because if you read the news articles, it says that tax consultants say there is no concern of double taxation as there are tax treaties in place to prevent that from happening. That is true to some extent, but keep in mind, if you just search on LHDN's website, there are countries with effective and full double tax agreements in place with Malaysia, like Australia and Hong Kong and etc. And then at the bottom, you will see that we only have limited DTA with the United States, which only covers the income of shipping and air transport enterprises between the US and Malaysia. So I think if I am not wrong, and I hope I am wrong, there is nothing stopping the Malaysian government from imposing another layer of tax on the income you derive from the United States, for example like dividends, so you can still be taxed in the US as well as in Malaysia. But anyway, from an investor's point of view, unless you you are heavily invested in foreign stocks that pay high dividends, this shouldn't affect you as much as it will on small businesses that sell locally and globally. Now, we have broadly covered the foreign source income tax, but surely I know some of you will ask me, how about capital gains? For those of you whom are not familiar about this, let me give you a very brief example from the perspective of an investor. If you bought say 100,000 ringgit worth of Tesla stock and after a year or two, you sold it at say 300,000 ringgit, that means your capital gains is 300k minus 100k, which is 200,000 ringgit. Now, that 200k is considered as capital gains because you are profiting from the increase of the value of the capital asset, which in this case is your Tesla stock. And as we all know, non-resident aliens like us Malaysians are subjected to no US capital gains tax, which means the US government doesn't charge you capital gains tax for the 200,000 ringgit that you have just gained from selling your Tesla stock. So technically, if that money remains in your brokerage account, you won't be imposed with any capital gains tax. Now, what happens if you bring that 200,000 ringgit back from your brokerage account back into your Malaysian bank account? Well, according to PwC, they noted that only remittance which is income in nature is subject to tax. Capital gains remitted are not subject to income tax. And also, KPMG stated the same thing. If the income stays overseas, it will not be taxed. What should be highlighted here also is that this will only apply to income. Gains that are not taxable in Malaysia will not be subject to tax. So from their statement, we can see that Malaysia will not impose any tax on your capital gains. But when you bring money back to Malaysia, especially if it's a huge sum, no one can guarantee you that the tax authority will not knock on the door and audit your source of income. So you still have to be prepared for that. And that honestly is pretty concerning because for sure, they will check whether the money that you have remitted back to Malaysia is income based or capital based. And I am sure for most of us, our foreign stock investments will usually comprise of a mix of capital gains and dividends paid by companies or ETFs as well. So that creates complication whereby you need to be able to show proof of income that majority of those amount is capital gains and not dividends paid by companies. The reason why I've emphasized this is because tax experts can say whatever they want. I can tell you whatever I researched from the internet, but at the end of the day, the fate of your money, whether or not it will be taxed, boils down to how the tax authority deem it is. So please remember to keep all of your funding slips, monthly brokerage account statements and whatever to protect yourself, because if shit really happens down the road and we are talking about huge sum of money, you might find yourself in a super sticky position where only your documentation can save your ass. So after going through all of those, allow me to provide you my personal take and how I feel towards this foreign source income tax. Firstly, I think that the introduction of this tax further complicates matter if it wasn't complicated enough already, because it would take a massive effort to segregate foreign business income, dividend income, capital gains and whatsoever. And imagine if you are trying to identify each of them clearly for your money from multiple countries, which involves foreign exchange and gains from multiple sources like stocks, ETFs, options, crypto, and you add on the fact that we could be talking about cashing out 5 or 10 years later. That is so many things to take in for the tax authority, let alone the commoners like us. And that to me, in my opinion, opens up the leeway for commoners to get scrutinized or penalized further. And for those that are unable or not savvy enough to protect themselves or provide sufficient documents, you can already imagine the consequences for them. What if you already kept your funds over in your brokerage account for the past 15 years trading stocks and options and whatever? What if you never kept the account statement or the broker already removed them, right? All of these are questions that I think needs to be addressed properly in detail. Second, whether or not this benefits the country's economy in the long run is questionable at best. To me, it seemed like a short-term solution to patch the leaking hole with the transitory tax rate of 3%, which will obviously encourage a lot of money inflow in the short term. But in the long run, I think it will hurt foreign direct investments, whether you like it or not. And corporates and SMEs will find more creative ways to avoid bringing money back to Malaysia just to avoid paying that hefty tax if they weren't already. Or at least that's what I think in my humble little view. Why don't you let me know what you think in the comment section down below. All said and done, for now we are only only weeks into the new budget 2022, so expect more updates and clarifications to come from the authorities. One of the tax experts did recommend that care should be taken to ensure that this move does not discourage the remittance of funds back into Malaysia. It is hoped that a transitional period will be provided, and the government should consider directing this proposal at corporates and not individuals. Oh well, anyways, we can only speculate for now. Who knows, they might actually exclude investment income and gains from being taxed for individuals altogether. You never know, right? Regardless, I will monitor this subject closely and update you guys accordingly if there is anything significant. But for now, that is all I can gather within my limited capacity, so hopefully it gives you a little bit more clarity, and if it did, a little thumbs up will be very appreciated. Thank you very much. Anyways, I will link all of the useful resources down below in the description box, so feel free to read them out for more details. Before I end this, just a quick disclaimer: I am not a qualified tax or financial advisor, and I am in no way affiliated with any authorities or any parties. Whatever I've said in this video reflects my personal view only, which could be right and could be wrong as well. So for what it's worth, please take it with a pinch of salt. Alright, with that said, thank you very much for watching. Stay safe, stay invested, and as usual, I will see you in the next one.